Okay, I'm going to go live. I hit
Okay.
that.
We're ready. Yep.
Welcome to Diva's Two Cents, where we take complicated matters and we break them down for the everyday American. I am so happy that you're here with us today. And if you would like this content or any of this content resonates with you, if you can do me a favor and like it and share it, I'm sure there's somebody that you know that could use this information and would like to listen to it. Okay? Thank you. Now, today I have a special guest. Today, I want to introduce to you Mande Clark, who is a Main Street business certified tax advisor, Main Street tax advisor. She has a passion for empowering individuals and businesses. She's also honed her experience in various areas. Now, in 2018, she earned a certificate in commercial real estate development from Cornell's SC Johnson College of Business. For the realtors out there, pay attention, take a listen, okay? Now, she's also expanded her knowledge in the financial as a financial coach master training programs with Dave Ramsey and the financial counseling program through AFCPE. She's recognized as the authority in her field. Mande teaches cost segregation, real estate professional status, and self-rental strategies and at the real estate tax summits and the tax and legal 360 conferences that are put on by the esteemed Mark J. Kohler, which most of you know. Additionally, she has participated alongside Mark Kohler with other tax professionals exploring innovative tax strategies. So please help me welcome here Mande Clark. How are you?
I'm great. Thank you so much for having me today, Diva.
All righty. So,
Can't believe I'm on Diva's 2 Cents.
I know we're going to really pick your brain here with these 2 cents of mine, right? Well, first and foremost, I mean, this is the question that I want to know because I'm also a tax advisor. But tell me, what is your favorite thing about being a tax advisor and being a financial coach?
I think for me, the educational aspect is probably my favorite. For a long time, I didn't know much about money. I grew up knowing three things. This is the three things that I was told. Save 10%, which we all know if you only save 10% in a savings account, you're losing spending power every day. So that's not going to do much good. Number two was money doesn't grow on trees. Great financial education with that comment. And number three is we can't afford that. So that was the financial knowledge that I grew up with. And fast forward, as an adult, looking up at a relatively older age and not having savings, not having retirement, not having a big education in the financial world, that became my focus. I started reading every single book I could get my hands on. I was listening to podcasts. I was taking classes, getting certified wherever I could, and learned so much that I didn't know. And I think, oh man, if I would have known this when I was 18, my life would look so much different. But I may not have a passion for teaching others. So the educational aspect to me is huge. So I love to teach clients, my friends, my family. My niece and nephew really get sick of hearing financial comments all the time. But I love teaching because, I taught a class at a community college here, to their faculty and staff a couple weeks ago, and we talked about financial wellness. And financial wellness is impossible if you're not literate. You have to have financial literacy. And so the only way to do that is to be educated. So I would say my favorite part about working with people is just being able to educate them, whether it's from growing wealth, saving money on taxes, setting up a revocable living trust, just all of these different things, that come along with the accounting industry.
Well, I know you dabble a lot in real estate, and we do have a lot of real estate investors here and realtors on. So, what is this cost segregation buzz that's out there, Mande? Talk to us about cost seg. Why is it that it's everywhere? All the gurus are talking about it.
Yeah, so cost segregation, just to give a quick summary, because I could teach an hour-long class on cost segregation, but cost segregation is a way to take a residential or non-residential property, and instead of depreciating it over 27 and a half or 39 years, we're able to take aspects of those properties out and increase the rate at which we depreciate. So, for example, a 5-year property, things like appliances, we can say we have $20,000 of appliances in a home that we're going to rent out. Well, instead of having to depreciate that over 27 and a half years for a long-term rental, we can speed that up and depreciate it over 5 years. And then we add in bonus depreciation, and we get to speed that up even faster, possibly in 1 year doing 100% bonus. So it allows us to take losses against that property a lot sooner. So that's what the benefit of cost segregation is.
Okay, so let me ask you this. Is it for everyone? Is it for every single investor that's out there that owns real estate?
Some people would have you believe it is. There's an argument to be said that if you get audited and you have done a cost segregation study, even if you opt out of bonus depreciation, that it's a good backup because that was allowable depreciation. But in reality, if you can't take advantage of the losses that the cost segregation study and bonus depreciation allow you to have, then it's probably not beneficial. So for me, I can't qualify as a real estate professional. So if I go buy a long-term rental and do the cost segregation study and take bonus depreciation, I'm not going to be able to benefit from those losses because there's going to be a limit. And so it's not beneficial to me. So someone in my shoes, I would tell them not to do it.
Okay, so you said a couple of things there that perhaps someone in the audience may have heard it and not quite understood it. You mentioned short-term rental. What's a short-term rental?
So a short-term rental is like a residential property. It's actually classified as non-residential, but it's a residential property that has an average stay of 7 days or less. And there's this great thing called the short-term rental loophole that is pretty much, I mean, it's available to anyone who can, check the boxes and hit the rules. And a cost segregation study, when done correctly with a short-term rental, can be very, very beneficial.
Interesting. Interesting.
Yeah.
Wow. Okay. So what are some of the biggest challenges that you find that your clients that come to you have when it comes to investing in real estate? What are some of the challenges?
I think challenge number one is getting them to plan. I think a lot of times you have a client come to you and say, "Oh, hey, I bought a condo." I'm like, "Oh, you did? What are we doing with the condo?" "Oh, I'm going to flip it. I'm going to use it as a short-term rental." "Oh, I'm going to use it as long-term rental." But they haven't really planned out. So they haven't planned how we're going to be able to take advantage of, depreciation or passive losses, or if they can. The other thing is not planning financially. So I always encourage my clients that if they're going to have a short-term or long-term rental, that they would be able to cover 6 months of their expenses. So they would have that sitting in savings. And a lot of people don't want to do that, but that can cause a lot of problems. So I think that's one of the biggest challenges is, helping your clients know that it's better to plan. Ramit Sethi, hopefully I don't butcher this quote, but he says the difference between the average person and rich people is that rich people plan. They have a plan. And so I think that's a challenge. And then also just getting your clients to understand that it's important to have that cash set aside so that if your property can't get rented out, that you're not in a bind. You've got the cash to back it up to cover those expenses for 6 months. Wow. And that's been a big challenge because people just want to buy because they hear it all over the internet.
Oh, okay. So when they come to you, do they come prepared? Or do you have to have hard conversations?
I mean, my current clients know how I am, so they know I'm going to ask those hard questions. But still, I have some clients that they respond back in 2 minutes. They are planning ahead 10 years. And then I've got other clients that probably haven't looked at a profit and loss statement I've sent them in 3 years. So,
okay.
I think it's kind of both. It just depends. Everyone is so different.
Yeah. Well, what are some of the areas that you think your clients need more of?
Oh, that's a great question. Education.
Mm-hmm. Mm-hmm.
I
Yeah.
love education,
Yeah.
but I'm terrible at sending out newsletters and doing webinars.
Okay.
So I think just learning the little things like, and this has to do with every small business, not just real estate, but like learning that the gift limit is $25. Like, when's the last time you bought a client gift that was less than
I
$25?
know.
Like,
I know.
most of the time we're buying bigger gifts for our clients or our board members. So just education on those little things, learning that they can't swipe their card at the gas pump and pay for fuel just because they went on a photo shoot for their business. Like, if that vehicle, if they're not taking actual expenses, that isn't okay. They need to just claim the mileage. So I think it's just that educational tool yet again of just teaching them more. So that's one of the things I'm trying to do better this year with your encouragement, Diva.
Okay, well then let's talk about the average person that comes into your office and they just have W-2s. That's income. And they may have a lot of W-2, a lot of W-2 income, but what do you suggest for them?
Start a side hustle.
Mm-hmm. Okay.
Even when I was teaching to the faculty and staff at McLennan Community College last week or 2 weeks ago, whenever it was, they're all W-2 employees. And I was teaching on financial wellness, not even tax strategies. But of course, I always have to throw in tax strategy. And I said the best tax strategy is to start a side hustle. Because when you start a side hustle, that allows you to convert some of the personal expenses that you have, things like your internet, your cell phone, home office, like auto expenses, like some of those expenses we can now convert to business expenses because you're using those in your side hustle. So now you're making additional money. On your tax return, it may not look like much, but you're making additional money, but you're really not spending anything else because we're just converting the expenses that we already have to business expenses. So I think if we want to save money on taxes as a W-2 earner, that's a great way to do it. There are great benefits to having real estate as well, but a lot of W-2 earners, unless you have a certain income level, can't afford to purchase real estate. Like it's hard to go out and just buy a second home or even buy a condo. But there are, like the short-term rental loophole, a W-2 wage earner can use that, the passive losses that the short-term rental loophole creates to offset their W-2 income. So you kind of have to look, everyone's so different. You always say, what about this? And it depends on the situation. If I have a W-2 wage earner that comes in and they make $50,000 a year, I'm really going to encourage them to start a side hustle. If I've got a client that makes $250,000 a year, we're probably going to go for real estate because we want to offset that income. So then for that client, it would be more of the short-term rental loophole.
Oh, okay. Okay. So that type of client that you put into short-term rentals or you advise them in that direction, do you also advise them to do their own cost segregation?
Oh, absolutely not. Yes, you can do it, and it is absolutely free, but you do not have the credentials to do your own cost segregation study. And it's not reliable. If you get audited, which, I would say if you're going to take a big depreciation expense, like you're just kind of increasing your chances of getting audited. But if you get audited, like my oven costs this much and the electrical to the oven costs this much, that's not going to stand up in an audit and they're going to kick that out. So I always encourage my clients to use DIY Cost Seg. They're a great company. They do everything online. As long as you know your basis and your land value, you're able to put everything in their system. And then they kick out a report that you can use or give to your tax professionals so that you can take those, accelerated depreciation on those items. But I always tell my clients, if you're going to use an online company, as opposed to having an engineer come out to your property to get a cost segregation study done, that you have to pay for audit support, because that means that if you do get audited, they'll actually send an engineer to your property. And then that engineer will create, an on-the-ground cost segregation report. It's probably going to give you more depreciation options or, a higher depreciation expense than the original one. But then that protects you in an audit as well. So do not do your own cost segregation study. Use a company. And if you choose to use an online company versus an engineer coming to your property, make sure that you get audit support.
Okay, and I'm going to put it into the chat right now. It's CYI. Is that what it is?
No, DIY. Like
oh,
do
D.
it yourself.
Okay, D. Okay.
Yeah, DIY. CrossSeg.com.
And where are they located?
I don't know where their base is,
But
but they've got engineers all over. And if you use my name when you go to pay for your cost segregation, if you put my name in, you actually get a discount.
oh, listen to this. Even tax, not only tax strategy, but tax savings as well. You
Mm-hmm.
see? Thank you,
Yep.
Mandy. I put it into the chat just in case
Okay.
anybody. And then, Mandy, if someone wanted to get a hold of you, how do they get a hold of you? I'll put it in the
Oh,
chat
well,
as
hold
well.
on. In chat, you put DIY. It's DIY.
Oh,
Do
DIY.
it
Ooh,
yourself.
okay. Let's get rid of that one. Okay, okay. No problem. We'll get rid of that and we'll put D. Do it yourself, huh?
Yep. Do it yourself cost seg. And I
D.
do encourage everyone, like, if you're going to do something like that, that you really understand what basis in your property is. And so talk to a tax professional that works in real estate, because it's not just your purchase price. Like, there's things that get added to your basis, there's things that don't get added to your basis. So you really want to make sure that you know what that number is and you know what your land value is before you go and use anything of it.
Okay. Okay. Well, you're a tax advisor and you deal a lot with real estate. Where do you find the industry is going in terms of real estate moving forward? Like in the next couple of years, what do you see investors moving towards, in your opinion?
Man, that's a great question. I know that there's a lot of chatter out there that like short-term rentals kind of saturated, and there are a lot of cities that are putting the kibosh on either giving out new permits. There are cities that are taking away short-term rental permits. And so I think that that's going to be an interesting transition to not having as many short-term rentals out there. And I mean, those owners could either just switch to midterm or long-term rentals and not sell, or we could see an influx of properties coming on the market that were used for short-term rentals, just simply because they're not making as much money on them anymore, and so they want to just go ahead and offload them.
We
I don't know. I think a lot's going to depend
a
on what
lot.
happens in the election, where interest rates go. You know, are we going to see a crash in the market? Like, are we going to see? I don't really know. Like, that's such a hard question.
Okay, but I think that
Really
you're
killing me, Diva.
positioned. No, but I think you have the answers because I think you're positioning it where it's so important that this knowledge is shared, that this education goes out there, that you partner, especially if you're realtors out there or investors,
Yeah,
that you find folks like Mandy that's very well versed in all of those different strategies
yeah.
and those laws and rules and regulations because everybody knows every year we get a book. As a matter of fact, I have one right here. These are tax updates, guys. So, I mean, every year something new comes out. So it's important to be on top of your game when you're
Yeah,
dealing with the IRS,
yeah.
especially now with so much change. Mandy, I can't thank you enough for all this knowledge that you're bringing to the table here. I want to put if we can put Mandy's name and her phone number. What's your phone number, Mandy? Or where do you
My
want
phone
them to
number?
call you? Or their
I don't
email?
know.
Just give us an email address that people can reach you at.
Yeah, it's Mande, Mande, at mandeclark.com.
Okay, we'll put that in. We'll put that there so that people that are interested and want to hear from you and want to discuss some more of these wonderful strategies that you have. Do
Yeah.
you find that you're doing more real estate consulting or on tax strategies than financial, like you were heavily on the financial, or is it now a 50-50 split?
I think I've focused a lot on the personal finance aspect. And so because of that, like as I'm looking more at what, so let me back up. So I was doing all business and then I took a shift and did a lot of personal because that's where my passion was. And now it is definitely a split. I take a very holistic approach and I tell, I had two calls yesterday where I told potential clients, like, I'm not just going to look at your business and give you advice because I don't know, like, that's very compartmentalized. Like, I can't encourage you to go buy a real estate, like a property, if I don't know that you have $50,000 in credit card debt that's, you're paying 25% interest on. So I take a very holistic approach and I don't just look at their business. I'm going to look at your personal finances. If you want to be one of my clients, we're looking at, estate planning and asset protection, retirement accounts. Are you going to have to take care of your parents? Like, do you have kids that are about to go off to school? Like, what is your personal situation? Because in order to advise you from a business standpoint, I have to kind of know what's happening over here. And I think that's one of the things that some tax professionals miss because they think, oh, they just asked me to help them with their business. But you're only seeing just a small, like it's like this much of the picture when you really need to see the whole thing. And so for me, I would say it's both. And it's both because I've made my company that way. Like my client relationship is focused on the whole picture instead of just their business. So there's personal coaching, there's personal encouragement of, hey, we need to save more, we need to put more money in retirement, we need to get those credit cards paid off, things like that, on top of a lot of the business coaching and like, where are we going, how can we make more money, how can we save on taxes.
Oh my goodness. So what drives you crazy? What drives you crazy?
Oh. Oh.
Because we're all of us in the tax profession, especially during this period, right? We're in a tax season. We're like pulling our hairs, I mean, I think I get a couple of more grays every day, but what drives
these whites coming in strong.
What drives Mande Clark crazy when it comes to this business?
I think what drives me the most crazy is when potential clients will come to you or a client comes to you and they don't really want to hear what you have to say because they already know everything. And if you already know everything, you don't need me. So, and it's frustrating because then you won't listen. And I had that, a potential client reach out and it's just like they knew everything and they didn't want any of my advice or, and so why do you want to work with me if you don't want to do the things that I'm going to encourage you to do? You either trust, my experience and my knowledge. And I'm not saying you come to me blind. I think it's very important to have your own education, to listen to podcasts and ask questions. I don't think you follow anyone blindly, but it is very frustrating when a client doesn't want to listen to anything that you're saying. So
yeah,
I would say that's what drives me crazy.
Yeah, and I'll add to that. It's not necessarily what you know that hurts you; it's what you don't know. And 9 times out of the 10 they don't know. So, and that's mainly why they come to us. There's not that many. This is why we have 9 digits. I said that this morning. 9 digits are like 1 through 9, but there's really 10, 0, right? If you add that as a digit, but it's what you don't know that hurts you. So seek out professionals like Mande. Seek her out. We're not for everyone, and we recognize that. And we're not going to help everyone, and we may not be able, but we're honest and we come forth and we say, this is, this is red, this is green, this is black, this is blue. It is what it is. So don't be afraid of the IRS. Don't be afraid to explore in the real estate industry, whether you have a license or not. And Mande can attest that you don't need a real estate license to be an investor, do you, Mande?
Nope, not at all.
Can they be a real estate professional designated as a real estate professional?
Yeah, you absolutely can. It just depends on what industry you're in, and what you're spending your time doing. So I think you just have to know the rules. I was talking to some friends this morning and we were laughing at, some of the big social media stars that will pop off and say, oh, you can write this off, you can do this, you can do this. Well, a lot of it's not true. Like there may be a smidge of truth to it, but you really need to understand the rules. So to say, oh yeah, you can take a $200,000 deduction against your W-2 income by being a real estate professional. Well, guess what? That's not actually how it works, because I can't be a real estate professional because my full-time job is in the accounting industry. There's not enough hours in the day to make that work. And the IRS even says that. So you just have to know those rules. And if you're interested or think you qualify as a real estate professional, talking to someone that really understands the rules and can guide you in the right way of, hey, we need to check all these boxes in order for us to check the real estate professional box. Like, have that knowledge, have those conversations with someone who deals with people in the real estate industry.
Okay, well, thank you so much. Greatly appreciate you having you on the show. Say again, give us your email address again for those of you that didn't hear it.
It's Mande, Mande, at mandeclark.com.
Mande, where are you located at?
I'm in Texas.
Oh.
Waco, Texas.
Oh, okay. Is it cold there now?
It's weird. Last week it was like in the 80s. literally you're sweating, wondering why is it so hot in February. And then this week it's been in the 40s in the morning, and then it's sunny right now, so it kind of feels good out, but there's still chill in the air, which is how February
Oh,
should be.
come
It should
on.
be 80 or 85 in February.
You're having
So
a heat wave.
I know.
Well, thank you, my dear. Thank you so much. Blessings to
Yeah,
all. And to all of you, please share this content. Share it with your, like it, share it. And I'll see you next week. We have a special guest next week as well. The granddaddy of Texas, John Hewitt, will be joining us next week. So stay tuned. Okay. Thank you, Mandy. I appreciate you.
yeah. Thank you guys. Bye.